3 weeks ago, a community bank CEO told me something that should terrify every financial institution leader. His bank just lost their biggest commercial client to a Fintech startup that processed their loan application in 48 hours. The same loan that would have taken his bank 3 weeks to approve. This isn't an isolated incident. It's the new reality reshaping banking right now. I'm Victoria Chen, AI business strategist with Advanedge Consulting. And what I'm about to share with you isn't theory. It's intelligence from the front lines of financial transformation. Richard Montgomery joins me today. He's seen these shifts firsthand as a banking executive navigating digital disruption. Richard, when you adjust those silver-rimmed glasses and really look at the data, what are you seeing in terms of competitive pressure? The numbers don't lie, Victoria. Digital-first competitors are capturing market share at an unprecedented rate. Traditional banks are losing ground in lending, payments, and even core deposit relationships. The gap isn't just widening, it's becoming a chasm. And here's what makes this particularly urgent. Every day that passes, without strategic AI implementation, traditional institutions fall further behind. Competitors who are already generating millions in new revenue streams through intelligent automation. Most bank executives think they understand the threat, but they're missing the full picture. When we conduct digital readiness assessments for institutions, we consistently find 3 critical blind spots that are costing them serious money. First, legacy thinking about customer acquisition. A regional bank we recently worked with was spending $47 to acquire each new checking account through traditional marketing. Meanwhile, their AI-powered competitor was acquiring similar customers for $12, using predictive analytics to target high-value prospects with precision. Second, operational inefficiency that customers can actually feel. Richard, you've experienced this transformation process. What does inefficiency look like from the inside? It's painful, Victoria. Manual processes that take days when they should take minutes. Loan officers spending 60% of their time on paperwork instead of building relationships. Customer service representatives who can't access complete customer profiles because data lives in silos across multiple systems. Exactly. And third, the revenue recognition problem. Most institutions can't quantify the money they're already leaving on the table. Cross-selling opportunities missed because systems don't communicate. Commercial lending deals lost because manual underwriting can't compete with automated decision engines. Payment processing revenue flowing to third-party providers instead of staying in-house. Here's a specific example. An institution we worked with discovered they were processing over $200 million in annual payment volume through external providers. By implementing integrated digital payment solutions, they captured processing fees that generated an additional $8 million in annual revenue. That's money that was always there. They just needed the right technology to recognize it. But here's where it gets interesting, and where smart CEOs are pulling ahead of their competition. Artificial intelligence isn't just improving existing processes. It's creating entirely new revenue opportunities that didn't exist 5 years ago. The institutions generating $2 million plus in new AI-driven revenue are doing 3 things differently than their struggling competitors. First, they're implementing intelligent customer analytics that predict behavior before it happens. One bank we helped deploy AI-powered customer intelligence increased their loan origination volume by 34% in 18 months, not by lowering standards, but by identifying high-quality prospects their competitors were missing. The AI analyzes spending patterns, deposit behaviors, and engagement metrics to surface customers ready for expansion services. Instead of generic marketing campaigns, loan officers receive qualified leads with specific product recommendations and optimal timing insights. Second, they're modernizing core infrastructure strategically. This is crucial, Richard, because piecemeal upgrades create more problems than they solve. Absolutely. The big 3 core banking providers, Fiserv, Jack Henry, and FIS, serve roughly 70% of U.S. banks. But simply having modern core infrastructure isn't enough anymore. It's how you integrate and leverage that infrastructure that creates competitive advantage. Core banking modernization becomes transformative when it enables real-time decision-making, seamless API integration, and customer experience personalization. We've guided institutions through migrations that reduced operational costs by 22% while simultaneously improving customer satisfaction scores. And third, they're accelerating lending workflows with intelligent origination systems. This is where solutions like Abrigo become game changers. Abrigo's loan origination platform streamlines the entire lending process, enabling institutions to make faster, smarter credit decisions while maintaining rigorous risk management standards. The competitive advantage is dramatic. While traditional banks struggle with manual underwriting processes, institutions leveraging advanced loan origination systems are approving qualified borrowers in hours, not weeks. Abrigo helps institutions compete effectively in modern credit markets by automating workflow stages that historically created bottlenecks and delays. But implementation success depends on strategic integration, not just technology deployment. When we work with institutions on digital transformation, we see consistent patterns among the most successful implementations. It starts with comprehensive system integration that connects core banking, lending, platforms, payment processing, and customer analytics into a unified ecosystem. A community bank we recently helped had separate systems for deposits, loans, and customer relationship management. Customer-facing staff needed 4 different screens to complete basic transactions. We integrated their core banking platform with their loan origination system and payment processing infrastructure, reducing transaction completion time from 12 minutes to under 3 minutes. The customer experience improvement was immediate, but the operational efficiency gains generated sustainable competitive advantage. Employees could focus on relationship building instead of system navigation. Customer wait times decreased. Cross-selling opportunities increased because staff could see complete customer profiles instantly. Payment processing integration creates particularly significant opportunities. Instead of referring customers to external payment providers, institutions can offer comprehensive digital payment solutions, capturing fee income while strengthening customer relationships. Regulatory navigation becomes critical during these transformations. Financial institutions operate in heavily regulated environments. Every system change must comply with complex requirements around data security, privacy, and operational risk management. Advanedge helps clients navigate these regulatory challenges while maximizing transformation benefits. We ensure compliance throughout the implementation process, so institutions can focus on revenue generation rather than regulatory concerns. The blockchain integration opportunity is emerging rapidly. Forward-thinking institutions are exploring distributed ledger technology for trade finance, cross-border payments, and identity verification. Early adoption creates first-mover advantages in markets where blockchain solutions provide clear value propositions. Richard, when you look at the institutions thriving in this environment versus those struggling, what separates them? Vision and execution, Victoria. Successful institutions recognize that digital transformation isn't a technology project. It's a business strategy. They're not just upgrading systems, they're reimagining how banking relationships create value for customers and shareholders. The institutions generating millions in new AI-driven revenue started their transformations 18 to 24 months ago. They're not smarter than their competitors. They're just further along the learning curve. That's the critical insight. This transformation is inevitable. The only question is whether your institution leads the change or reacts to it. Market dynamics are accelerating. Customer expectations are rising. Competitive pressures are intensifying. The institutions that thrive over the next decade are making strategic investments right now. They're modernizing core infrastructure, implementing AI-powered customer analytics, and integrating digital payment solutions that create new revenue streams while improving operational efficiency. At Advanedge, we've guided dozens of financial institutions through successful digital transformations. We understand both the technology possibilities and the practical realities of implementation in regulated environments. The future belongs to institutions that adapt. The revenue opportunities are real. The competitive advantages are sustainable, but the window for strategic positioning is narrowing. Smart bank CEOs are using AI to generate millions in new revenue, while their competitors struggle with legacy limitations. The question isn't whether digital transformation will reshape banking. It's whether your institution will lead that transformation or be left behind by it. The window is open, but not for long.